there has been some significant change in the investors moving into the real estate market. We'll go ahead and skip ahead, guys, to the second part here. We'll put the Bloomberg tear sheet up, please, which is C5. We are seeing Blackstone. This was a deal just announced yesterday, which is part of the reason I really wanted to make sure that we got this, is that Blackstone, the major investment group, is now signing a $10 billion deal. Quote, is the latest bet that property is near lows. The firm will acquire the real estate owner apartment income rate. They are planning now to invest $400 million into the portfolio. So the reason that it matters is that we're seeing continually gobbling up more and more shares by institutional capital into apartment, into real estate, and basically into the housing market. This is increasing now to a point where what we are seeing is that this bet that single-family landlords and others can be rolled up to create consistent rental income that is coming to you. They can try and reduce the services. It's a basic economy of scale argument, but the reason it matters is that this is one of the largest real estate managers in the entire US that wants to continue to invest in property and to roll up said income. And it actually comes at the exact same time that we have seen the apartment landlord, AIR, that they now acquired, that there's been more investors than ever that are moving into the market. So we actually have some interesting Redfin data that came out just last month. It shows that investors bought some 26% of the country's most affordable homes in the fourth quarter. That is the highest share on record. They say that elevated home prices and mortgage rates with sluggish rents have made low price is increasingly attractive now to investors. Investors bought 18% of all homes that sold in the fourth quarter, slightly up from a year before. Overall, investor home purchases had dropped a bit from the year earlier, but still maintain the highest share than ever before on record. And especially it is in Florida and California that investors are hungry for homes and are still just not able to find properties to purchase from an increased housing shortage. So you've got the shortage, you got the highest number of shares on record. Some of these may be small-time investors. I don't necessarily think there's a problem with that. But whenever you reach to the $10 billion level, then I think we're looking at a very significant problem. And now we're looking at a point where if you're renting in this country in the future, especially in a big city, there's a good chance that your landlord is a large private equity organization, and you may not even know it.
That's right. And they're making it more difficult for people to, get their first foot on that ladder of home ownership, which is really a central dividing line in American society between haves and have-nots. Are you a homeowner? Are you able to build that basic wealth for yourself and for your family moving forward or not? And so they're buying somewhat fewer homes because there are less homes to buy. But as you pointed out, as a share of all of the homes that are being purchased, their share continues to go up. And it makes sense from a capitalist perspective. Part of the reason why people are struggling to be able to afford a home right now, in addition to the astronomical prices themselves, is, of course, mortgage rates are up from where they were previously. That doesn't impact these large institutional investors as much because they're, by and large, not getting mortgages. They're coming in with all cash. Now, the interest rates still affect them in other ways. They take out loans for other things, potentially the cost of flipping the house, et cetera. So it impacts them some, but they're at a massive advantage because they can pay all cash and not have to worry about the cost of those high mortgage interest rates. So it's a huge disadvantage for just regular people who are trying to buy a house, and really will be one of the most consequential developments you can imagine in terms of, how the economy shapes up moving forward. We've also covered here the way that these companies increasingly use algorithms to basically rig the market, and de facto, and this is the legal allegation actually, is that they're de facto colluding with each other to artificially lift rent prices in a lot of markets across the country. And there's also a lot of documentation about how these large landlords, they're impersonal, they're anonymous. They never have to look you in the face. They have to look you in the eye when they're kicking you and your kids out of your apartment, or when they're jacking up the rent to make it so that you're having to skip meals and, can never even imagine going out to eat or going on a vacation. They don't have to look you in the eye when they're doing that. So they're perfectly happy to squeeze you for absolutely everything you're worth, to delay maintenance, to basically, in some instances, as documented, actually have your living conditions be unsafe if they can possibly get away with it. So it really is a nightmare scenario in a lot of ways. One of the things that we were talking about yesterday is how this divide between the housing haves, like ownership in terms of ownership, the haves versus the have-nots, may also be driving some of the political voting behavior that we're seeing that's otherwise head-scratching. So why is it that older voters, at least according to some polls, and let's take it all with a grain of salt, but some older voters seem to be more favorable towards Joe Biden, whereas younger voters who have been moving left and voting more and more Democratic in the modern era have been moving away from him? You'd be hard-pressed to find a story that doesn't fit better than this story of housing haves and have-nots. Younger voters, by and large, haven't been able to purchase homes. They're struggling, and the economy has made it very difficult for them. If you're a boomer and you have your home, or you're silent gen and you have your home and you're building all this wealth and you've seen your housing price do nothing but go up and up and up and increase your wealth, you don't care that mortgage interest rates are high. You're doing just fine. This economy is actually working pretty well for you. So that could actually be a really key political dynamic that's largely ignored, that's playing out right now in this election before our eyes.
I definitely think you're right. And it's interesting, too. I was just noting from one of my notes I forgot to mention is that this Blackstone deal is just a continued acceleration. They had just done a $3.5 billion deal to take a company called Tricon private, which has some 31,000 single-family residents across the U.S. and Canada. Now this adds thousands of more apartments. So when we consider the have-nots and others, the entrance of all of this in, we've got to find some sort of regulatory solution. We've highlighted here previously, there are some local efforts actually to trying to keep large institutional capital outside of the real estate market and not allow them either to own large segments of single family housing or to not allow them to at least be the first bidder. But we haven't seen anything be taken up like that on the national level. I think whoever is willing to do it, if you can get housing prices in this country, or at very least rental income and all that down in this country, or even stable, I think some people would be happy with that. That person would have a political winner on their hands, but it's just not in our lexicon right now. Luckily, some states are doing it.
Yeah, there is a little bit of a conversation happening in Congress, but it doesn't seem to have nearly the national momentum that it does because, let's be honest, there are a lot of powerful, wealthy interests that are arrayed against it. And that's always going to make it difficult to be able to get something through the Congress.
Hey guys, if you like that video, go to breakingpoints.com, become a premium subscriber, and help us build the best independent media organization on the planet.
That's right. We're subscriber funded. We're building something new. We want to replace these failing mainstream media organizations.
So again, to subscribe, it's breakingpoints.com.